The International Monetary Fund has stated that energy price support is costing the UAE as much as $29 billion a year, despite substantial progress in its reduction over the past 2 years. IMF data shows that the country has reduced spending on pre-tax energy subsidies by a third over the past 2 years, with total direct spending on subsidizing energy products falling to $12.6 billion this year from $18.2 billion in 2013, and a 31% decline. This was driven by cutting subsidies on petroleum products to $7 billion from $10.2 billion and electricity subsidies down 44% to $3.2 billion. Initial steps to reduce subsidies, including ending discounts for expatriate consumers of electricity in Abu Dhabi this year, have also made a dent. In January, the Supreme Council of Energy issued a report recommending that the Ministry of Energy begin gradually phasing out fuel subsidies, although the indirect cost to the UAE's economy of subsidizing energy products still remains high at 6.6% of the GDP. According to the IMF. When the impact of lost revenues from taxes, the damage to the environment and people's health, and the impact on congestion and traffic are taken into consideration, the cost of energy subsidies to the UAE is $29 billion, which is 229% more than the direct spending on subsidies. The UAE is the region's third biggest spender on energy subsidies, behind Saudi Arabia and Egypt, according to the IMF's data on energy subsidies for individual countries released last week. Gold's latest slide has helped wipe out half the gains from the last decade's historic bull run, taking prices back to a key chart level on Monday and threatening a break towards $1,000 an ounce. The price of the precious metal slid to a 5-year low of $1,088.5 an ounce in Asia, approximately a 50% retracement of the rally from its 1999 low of $251.70 to its record high of $1,920.30 seen in September 2011. According to a report by news agency Reuters, technical analysts who studied past price patterns for clues to future direction of trade expect this level to hold for now. However, a break could see gold drop back to levels not seen in nearly 6 years. Regarded as a safe haven in times of economic troubles, gold is being hammered by the prospects of an interest rate increase by the U.S. Federal Reserve, which could make the metal unattractive for investments. Overall demand for gold jewelry in Dubai was down 8% in the first quarter of this year, compared with the same period last year, according to data from the World Gold Council. Globally, gold jewelry demand fell 3% to about 600.8 tons, according to the nonprofit organization. According to the data provided by Dubai Gold and Jewelry Group, the retail price of 24 carats gold jewelry dropped from 145 dirhams last month to 134 dirhams, which would translate into a saving of 11 dirhams per gram. The retail price for 22 carats gold jewelry has also become cheaper, dropping from 137.75 dirhams to 127.50 dirhams. For 21 carats gold, the retail price declined from 132 dirhams to 122.25 dirhams. Sharjah Islamic Bank has posted a net profit of 204.6 million dirhams for the first half of 2015, compared to 202.1 million dirhams for the same period last year, recording an increase of 1.2%. Total assets also grew by 7.0%, reaching 27.8 billion dirhams at the end of the second quarter of 2015, compared to 26.0 billion dirhams at the end of 2014, with the result, according to SIB, attributed to its strategy of pursuing consistent and stable growth in profitability and a solid financial position. SIB says that it has successfully attracted more deposits during the second quarter of the year as customer deposits reached 15.3 billion dirhams, growing by 685.4 million or 4.7% compared to 14.6 billion dirhams at the end of 2014. Sukuk payable reached 5.1 billion dirhams by end of the second quarter too, compared with 3.3 billion dirhams at the end of last year, with an increase of 1.8 billion dirhams due to the issuance of new $500 million 5-year sukuk as part of the bank's $3 billion medium-term notes sukuk program. Sharjah Islamic Bank has said that it is strongly capitalized with the total shareholders' equity reaching 4.6 billion dirhams or 16.4% of total assets, with a capital adequacy ratio equal to 21.62% by the end of the second quarter 2015. The Statistics Center Abu Dhabi SCAD has revealed that non-profit institutions serving households in Abu Dhabi have made an income of 490 million dirhams in the year 2013. Non-profit institutions serving households are defined as institutions that are non-market producers with the primary purpose of providing goods and services free or at prices that are not economically significant to individual households or the community at large. Some examples of such institutions serving households include child and youth organizations, charities, cultural clubs, family welfare societies, and religious organizations. According to the latest report issued by SCAD, the gross income of nonprofit institutions totaled just over 490 million dirhams in 2013, while total expenditure stood at 777 million dirhams. The statistics show that around 70% of the overall expenditure was for workers' compensation, while general and administrative expenses accounted for the remaining. Contributions and grants accounted for 5% of the gross income, and revenues from various activities amounted to 56 million dirhams. The SCAD report, prepared in collaboration with the Ministry of Social Affairs and based on the Ministry's actual administrative records for 2013, emphasizes that accurate and up-to-date statistics will help improve transparency, fill data gap of the non-profit institutions, which represent the fifth institutional sector in the national accounts system, and also contribute in the implementation of the Emirates policies and the achievement of its vision.